Yeah,
Take
wow.
that trade.
Gold is up hard today. That's crazy stuff. Little
Yeah.
consolidation pattern just broke out of that last like 4 day period last week. That's great.
Yes.
Monday we had a big spike, consolidate. Monday we have another big spike. That's really yeah. I mean, look, gold, I don't really see a bear case for gold.
I I don't either, man. And I think they had the opportunity if they were going to pull it back down. They had the opportunity last week. They could have came in with the shorts, but they didn't.
What do you see, Jeff? What do you think?
Well, I think it's up on TikTok news.
Yeah.
I think,
TikTok news.
well,
Gold?
well, no, it's actually China kind of giving in to Trump a little bit, and maybe they can get a trade deal going. So it's getting all excited about that.
Interest.
Really?
Yeah, I mean, they were over in what was it, Madrid or whatever, where they were this past weekend talking about stuff, and they basically kind of put a deal together to. I don't know what the details are on it, who's buying TikTok or if they're taking away from China or whatever, but the I guess what's the best word? The amiableness to it of them, bowing to that because China's been flat out saying, "Screw y'all, we're not getting rid of it." And all of a sudden they're bowing in a little bit. And I think gold's popped up here today. I mean, if you just look at a 30-minute chart or whatever, when gold actually shot up is right when that news came out. So
Really?
I mean, it had gone up to 2,700, and it was fighting it for a little while, but right when that news popped out, gold shot above 2704 and ran right up to 27, what was it, 25 or whatever it was. So that's basically what you're seeing, and I think they're just getting a little positive mood with that. Now, this might be one of those, okay, they shot it up on the news, no, show me something really good. And then, of course, the Fed comes along and here comes Powell sticking his foot in his mouth. So who knows what's going to happen.
Yep.
So, but right now it popped up just because of that, I think. And now we get to see if it holds up here or not. The interesting thing, though, is that silver busted above 43 bucks. So,
Really?
and copper shot up also. So all of them went up. And when you get, copper, silver, and gold all moving together, it's just like getting the Dow, the Nasdaq, and the S&P moving together. It's going to go.
It's yeah.
So
Wow,
when you
silver
get
today,
and
man.
when you get all those three moving together, I mean, you're going to have a good strong surge in things. Even the uranium stuff popped up also. Like if you look at like URA or something like that, I mean, they all kind of shot up on that same type of news. So we
Oh
got all
my.
the metals jumping up here, um,
Yeah.
and even the nuclear stuff. So I
Dang
mean,
it, man. Look at that. Let me show you this. I got this uh I got these calls on UUU this morning on my scanner, and I was like, it kind of like started really, it was kind of started bad, dude. But man, if we had taken those, that would have
yeah,
been a huge winner.
yeah,
Huge.
Gosh.
yeah.
Now we got another guy in the house right here, Chris Pulver. He was talking about gold and silver the other week too. And Chris, that has worked out for you.
No complaints. That is for sure. I'm selling more puts on both. I'm selling more ratio spreads on both. I am thinking that technically we have to have a pullback on gold coming sooner than later. I'm just not shorting gold. I'm also not at the point yet where I'm like, I'm going to take some profit on gold. My mix or my mix of gold, silver, I have CEF, PHYS, GLD, SLV, so gold futures, silver futures. A lot of those have just been option income trades. Ownership, I own SLV, I own GLD, and I'm just going to ride those a little bit longer. I think that there's more upside to both. I think if we have a little bit of a correction, post Fed, or maybe we get a move on the dollar, bonds, gold, silver. I just think there's going to be a lot of volatility coming these next couple of weeks, but I still like gold and silver long a lot. I know gold's at all time highs, silver is not. So to me, I'm not really going to dump any positions on silver until Jeff's talked about this number a lot, 42. If we're up 42 on silver, I think there's room to get to 50.
That's right. I'm with you
Yeah.
on
So
that.
I'm riding it, man. Like I
But
think 50 is a hit. I'm going to go after that. And if I'm going to protect profit, I think 50 is my target.
I mean, it
That's
hit
nice.
42, I don't know how many times and finally busted it.
Yep.
Yeah.
So,
Friday. Or yeah, Friday. Maybe yeah, no, on Friday. Is it the time of the metals? It's the time of the commodities. Yeah, and I just saw so You know what? Like in retrospect, so I saw this news story on CNBC about uranium that they just signed a big deal with Great Britain, the US did, to build out small modular reactors. So longer term, I mean, that's going to be good for uranium. All these companies, UEC, UUUU,
CCJ was up like 8% today, about the same as UEC.
Mm-hmm.
CCJ.
Yep.
Look at that. That's a huge one. I mean, that's a huge, those are huge candlesticks.
Well, and that's another
Huge.
thing. I mean, just like when silver was hitting his head on 42, copper kept hitting his head on 460. And I just been waiting, frothing at the bit for them to bust those things. And finally, copper and silver popped up. And I don't see where there's a stop on, just like, Chris was saying, I don't see there's a stop on silver until you get up to that 49.85, that all-time
Yeah.
high up there.
Yeah.
So,
What do we need to see to keep copper strong? I mean, that was a huge messed up move going all the way down to 4.3, but we're building off those lows. I mean, is it just like demand? I mean, is it just global demand that's going to keep copper prices higher? I mean, that was the one tricky thing about Dr. Copper is, well, Dr. Copper just blew up 25% in a week.
right.
Now we've kind of established a low. It's like, that's just a ton of volatility. I mean, from Liberation Day, March to April, copper was also down. I mean, down 25%. And it did the same thing again, peak to trough around 27.5%. So it's just a lot of volatility on copper.
Well, ideally, what you want to see on copper is China's economy improving.
Yes, I agree.
And if you get any type of news like that, copper's going to the roof again.
Yep.
So that's what I've been kind of watching for. And with this TikTok news, maybe that we start being, nice and fuzzy warm with them a little bit and start getting some trade deals. I mean, you think about not only that, but where China's been hurting the U.S. is China's our largest purchaser of soybeans. They have put no orders in on our beans at all, period. And so it's killing the farmers. And Trump knows that. But I think if they start getting a little more friendly with, the TikTok deal and whatever other trade deal that they can do, I think then all of a sudden you're going to see things really start perking up and really kind of helping China because think about, I mean, everything on Amazon's made in China, and if everybody's starting to buy stuff from China again, well, here we go. That's going to
Yep.
help their economy. Things are going to pop up, and here comes copper soaring right behind it. So that's what I'm kind of waiting for is to see if they can get that taken care of. If they do, I think copper's going back up, well, at least up to those highs up there around 535. If they bust that, it's probably going to $7.
Oof. That's bubbly copper right there, Jeff.
It is.
That's wild, man.
Yeah.
Mortgage rates, we're at the lowest level since like 2023. 30-year mortgage is down to about 6.25 right now, 6.3.
Yeah.
All right, I got to ask thoughts. We pull up. I wanted to talk kind of rates, mortgage rates, and home builders. I know
Yeah.
it's been
a bad
announced
day
that
for home builders.
Warren Buffett has announced like he's been adding exposure to home builders. I think they've already had a good run. I was long like Pulte and Lennar and Toll Brothers like in 2022. I've got a really good run out of those. I'm not participating at these levels. I think what they're going to contribute to, and this is all like to be determined, but I think anything that's going to question our growth, I wouldn't be surprised if Trump announces like a national emergency for it. So if we have a housing emergency, meaning like we need rates to come down, we declare a national housing emergency, build. Maybe there's, I don't know what it looks like from a money standpoint. What does a national housing crisis look like? I think I've got a screenshot of it. Let me see what they would allow. But basically it would just give like probably it would give like stimulus for builders to just continue to build, add supply. But I don't know what that does to overall prices. Does that bring down prices of existing homes? Does that keep like new existing homes steadier? This whole idea of like, are we actually going to see lower rates on the 10-year, 20-year? Are we going to see mortgage prices continue to go lower? Or is this going to be a 2024 rate decision all over again, which is Fed cuts by 150 basis points, which is what's forecasted now until the end of 2026. And then the bond yields go up by 150 basis points. So I'm hoping that's not the case. I think, history says that if the Fed is cutting, bond yields should go down, but that's the whole game this market's been playing the last year or so.
Well, we're in a good nice little downward trend. I feel like
Look back though. Look back to like September 20, like there. We were also in a downtrend headed into a rate cut cycle, and then it just did the exact opposite.
Yeah.
That's my only concern going into this year. And again, I don't think this like blows up the bond market. I just think that it makes everyone's been holding out for the last couple of years, waiting and waiting and waiting for better rates, waiting to buy a home at better rates, waiting to refinance debt at a better rate, waiting for something at a better rate. Well, if it does what it did in September 2024, we're not going to see much better rates. It's going to be about the same. So I don't know if that's a huge disappointment to consumers, a huge disappointment to money and restructuring. This is the debt bubble that everyone's talking about at like 40 trillion for the next 12 to 24 months. This is what I don't know. I just think that we have to kind of wait and see how the Fed and price action play out this week and what happens over the next maybe 30 to 60 days. Because I mean, obviously I'd like to see lower rates. I think it would make sense if the Fed is cutting and actually sustaining a cut cycle through the end of 2026, maybe yields go down, but we don't know. It's going to be weird, man. Like, I just think there's a lot of volatility coming our way, but I'm still a bull. I think, let me ask you guys this. Do you want to fade AI? Do you want to fade like this bullish sentiment? Do you want to fade fiscal policy and monetary policy right now?
I do want to fade AI. I don't want to fade fiscal policy.
Okay, but are you fading AI across the board? Are you fading like AI tech, AI software?
I don't want to do anything with AI. Just
Okay.
I don't know what it's doing, man. I feel like it has to. I feel like what's the next leg up for like a company like Nvidia or Broadcom or something. I don't know what triggers it. I really honestly don't. But I don't really. I'm not certain enough to go to short it or anything. So
Well, the problem is though, and you got to think about this. I mean, I wouldn't fade. I mean, I wouldn't try to short AI. I mean, you think about investment in general. People aren't putting money into, AT&T and Kimberly Clark and General Motors, and they're buying these big tech guys. That's where the money's going.
Right.
yeah.
So you can't go out there and fade the general market. And you have to remember there's a whole lot more pensions and 401ks that are investing in this than we can do, right?
Right.
So I mean that's the problem you've got. So even though you get it correcting down, okay, fine. It's, to me, you look for a spot for it to pull back to and buy it again, as opposed to trying to short it up here and watch it die off.
Yeah, no, that's totally right. Like, who's gonna go and buy? Like these are the market. This is the market until we have like the new, it's like Fang, Max 7. It's like until we have a new thing, it's like I don't know where you go else outside of these companies, Microsoft, Nvidia, and then Hood is also one of the ones, but ABGO. I mean, yeah, I mean probably want to get down a little lower on a video,
Sell
going
puts.
long, but
Just
yeah.
sell puts. Like
Yeah.
that's the safest trade, man. I think if you're buying
Yeah.
highs, you're just gambling with high valuations. I think if anything, it could be if traders are looking for alpha, I think right now, like Tesla might be like the best alpha spot right now. I know it's hated and it's super polarizing, but this rip on Tesla, I mean, technically speaking, I've seen like the break above the like the 360 zone. It's pretty hard to argue with what just happened these last 2 days. And I mean, obviously it gapped higher today, but it's like all-time highs at what there, Alex? Like 480?
Yeah.
480?
483.
So I mean, even if we break out bull flag, I think all-time highs are achievable. I think this is like the embodiment of AI. I think this is a pretty good benchmark to have, or at least exposure to have in 2025 or 2026. I think that I don't know, I could see like Apple being just sell a bunch of puts and never get assigned. I could see Microsoft sell a bunch of puts, never be assigned. Google, like if you sell out of the money puts, you might never be assigned. There's stability in those stocks, but not necessarily a crash. But I don't think we're going to see just like 20, 30% gains. I think we're going to see a stall in the Mag 7. I think we're going to see a rotation out of the Mag 7 into other stuff. There's plenty of trades. I did this morning. I'm in Chevron CVX. I'm in XOM, or Chevron is XOM, and Exxon. Or I'm sorry, I get the backwards. XOM is ExxonMobil. CVX is Chevron. I added exposure to those for just the overall energy play, and then I did XLE this morning for some naked puts. So I did an 80 by 75 ratio spread. I did an 80 by 75 naked put combo. If I've got a margin account, I did the 80 by 75 sell put, and I collected $5.40. So
Yeah.
it's an income trade. I don't mind taking the assignment. It's a sector. It'd be less volatility than an individual energy company. Because that's one thing I'm not sure of, guys, is I don't know who the hell to pick. I don't know what stock to pick to trade energy. I don't know what stock to pick to trade AI. I just want to take, look, if the haystack can go higher, how can I get exposure to it?
Well,
That's where I'm at.
My opinion.
Yeah. Yeah.
I think you'll like XOP better than XLE.
XOP. Okay.
That's your exploration and production guys, as
Okay.
opposed to XLE that has, to me, has some really kind of some trash stocks in it. I mean,
Hmm.
and it doesn't pay as well as XOP does. Let me just say it
Okay.
that way.
Okay.
So you might check that one out as opposed to XLE.
Let me see. Probably I've already taken the trades on my margin accounts. I got plenty more for margin accounts. So I'm going to look at this XOP.
Mm-hmm.
I'm going to look at the April lows. That's a 99 low.
Right.
So I might just throw on like a 99 by 85 ratio spread and just see if I can have an income trade.
Mm-hmm.
Or maybe sell a couple of puts at the 90 by 99, or maybe 100 by 95. Let me see what that
Right.
looks like here, guys. So I'll go XOP.
Could also do ERX. It's a leveraged.
Yeah,
leveraged ones.
I don't mess with the leverage stuff. Because I mean, for ratio spread, I want time. I just want time to
Right.
work, and I want to get the time decay.
Right.
So let's go XOP. I'm going to run this into. I'm going to go a little bit farther. I think that this whole like energy play, probably, and I say this because like going into 2026, this kind of is a flashback to 2022, when we had this melt up COVID through the end of 2020 into all of 2021, into when the market finally realized the Fed's going to be raising rates in 2022. The NASDAQ peaked in November 2021. The S&P peaked in I think January 2022. But energy was a great Q1 trade. It was like all the way to April, energy was booming, and I got paid really well on energy plays. So I think I'm going to go either to March of 2026 or I'm going to go to June of 2026 and hopefully give energy, plenty of room. Go out in time so I get a decent premium on the out of the money puts. I'm going to go June 18th, 2026 on XOP. The 100, this actually is pretty good here, guys. I can go 100 by 95 for $1.31. I can go maybe up 189. Let's see. This isn't too bad here, fellas. I can do a 105 by 100, which is a ratio spread. So I buy the 105, sell the 100 with two contracts. I get $1.80-ish, $1.80, $1.85 credit. If I can take that trade, that is a 90% chance of profit, $1.80 income. If I get assigned, I'd own the shares way cheaper. I would own the shares of XOP at 100 minus 5 minus $1.80. I'd own shares at 93.20. So that would be off of current price. 93 gets me down to around a 28.5% discount off of recent highs. I'm not even sure what all-time highs are on that stock, but they're way up there. Wow, that's way up there.
Which ticker again?
XOP. I mean, the all-time highs in that thing are 335. Yeah. So, I mean, Alex, if you zoom out of that chart, like zoom way out to get all the history, go back to like 06. I mean, to me, that looks like a rocket Head and Shoulders, man. Like zoom way out, and that low that we had back during COVID, that could be a perfect little Head and Shoulders position that if we break above like 160, 165, I've got a Head and Shoulders that gets us back to like 260 plus.
Yeah.
Yeah, wow, that really is sold off.
Right?
Man, 2014 was such a good year for oil and gas.
Yeah, good year for the good year to buy after the dust settled,
Right. Well, it was the peak. People were hot on all these little explorers. I remember people talking up like Lilas Energy and stuff like that back in 2014, 2016, all these little tiny explorers in Texas.
Okay, so I'm going ratio spread. Let's see if I get filled here.
What'd you say, Jeff?
So that's when fracking really started to pick up.
Yeah. So Chris is going to write out that the trade details for you. R. Friedman.
Yep. Let me see if I can get filled here first. All right, just got filled for 175. So I'll put that in the chat. Here's what I'm doing. So this is XOP. I'm going out to the June 18th of 2026 expiration. This one's going to be out a bit. This one's going to be best on a margin account because it is like having a naked put. So I'm doing the buy 105 put with one contract, sell the 100 put with two contracts. I pulled in $1.75 credit, and that's filled. And I'm willing to own XOP if price is less than 100 by expiration, which is unlikely. There's about a 90% probability of profit. And chance of assignment is around about 10%. Okay, that's the trade. I'm actually going to post that officially in my Project Options Edge service.
You heard it here first, though, folks.
That's right. Profit panel. I'll label this profit panel. All right.
Yeah,
I'm going to get this in my margin accounts.
what's the bull case for energy? What's going to get us out of this slump, Jeff? Just growth and economic activity? What are we looking at? What's the
If I
thing?
can say it right, China.
Oh, right. Okay. China. Everything comes down to China. Hey, even AI.
Another thing is, I mean, right now they're throwing a bunch of well, I don't know if that's a good way of putting it. They're looking to put more sanctions on Russian oil. There, I'll put it that way. I mean, what was it? Trump said that I'll do it if everybody else does it, kind of thing. I couldn't understand what he was trying to do there, but anyway, if you're going to start restricting that, then they're going to have to get oil from elsewhere, and that's why you got a little pop up in crude oil today, is specifically because what he put out to the whatever the NATO people over the weekend or whatever it was. So I still think you're going to have to get a huge demand, and that's either going to be India or China at this point in time. And so India's been using Russian oil, and so if they can start using our oil or OPEC or whatever it is, of course, Russia's in on that. But anyway, I think that is going to be one of our bigger drivers in crude. Another thing, I mean, you've got right now the producers out there, thumbing their nose at Trump and his energy policy, because they don't want to produce, they don't want crude oil back down to $40. They just
Right.
don't want that. I mean, they can't make money doing it. So they don't want crude oil back down there. I mean, last time when Trump was in it, it was 26, 27, $35, whatever, in there somewhere, all over the place. And they don't want that again. So they're not going to, drill baby drill and produce so much oil that we get oil back down there. I don't think they'll have a problem with it getting down to $55 if that becomes the case. But you look at it right now, it doesn't want to get below 60. I mean, it goes down to $60, 59, whatever, and bounces right back up off that thing. And so they want to keep crude oil above $60 right now. And at above 60, everybody makes money. Frackers, producers, whatever it is, all the pump jack guys, they're all making money above $60. Below 60, frackers start losing money. You get really below $50, and the pump jack guys, Permian Basin, all those people, the Anadarko Basin, all those, they're going to start getting hurt. And so they don't want it down there. So I think you're going to see crude oil probably stay above the $55, $60 area, unless somehow Trump convinces them, hey, lose money and I'll help you out. I don't know how that's going to work. I have no idea. But outside of that, they're going to try to keep it up. If they can get more demand on it, of course, it'll drive it a lot higher. And that's why gold's up, I mean, off of TikTok, but crude's up just because TikTok news being friendly with China here. And if they're going to start buying more oil, it's going to take off again. Now, if that fails and dies, crude's coming back down. So, but I think the speculation out there is, hey, if we can get friendly with China again, they'll start, buying oil and everything like that from us again. So I think right now everything's just, a cat on a wire at this point. Everything is cross your fingers and hope that, they do start getting some trade deals done and on pieces of paper that are legal and binding and all that stuff. Right now it's just handshakes and love you mean it's.
So I personally think that the tensions with China are going to subside. I think that Trump wants to focus on a regional and Latin America. I think he wants to focus on domestic. I don't think he wants to get into a soft war with China right now. And so I think that deals are going to be made.
Yeah.
However, I did see this news story. I'm trying to find it here. I don't know where it came. I don't know if you saw this, if someone on CNBC maybe, but China threatened some economic weapon against countries who abide by they don't buy Chinese oil or something. I don't know, not Chinese oil, but it was something that I felt like it had something to do with oil, and I saw it this morning. Maybe it was on X. I can't find it. Have you heard it? Does that ring a bell to either of you? or Blake even.
I've not heard it.
Yeah.
You're talking about Trump or you're talking about China?
China threatened like they're going to do something if tariffs, if countries if countries accept the tariffs, they're going to do some economic warfare to those countries. I don't
Okay,
know
so
if
you're
that,
not talking about China putting antitrust suit against Nvidia.
no, it was
Okay.
yeah, Bodie's saying something to do with BRICS currency, maybe. Yeah, I don't remember what it was, honestly. It might not even matter. I'm just thinking about in terms of like oil, the bull case for warming relations with China and US. So on one hand, I do think it's gonna subside because I do think we don't want to get into a economic battle right now. Trump doesn't want to, but also there are shots being fired across the bow, at least this morning. But who knows? It's just rhetoric potentially. That was confusing, but just ignore that, folks. I don't know. I'll figure it out. I'll figure it out and talk about if I actually figure out what I'm talking about, I will tell you tomorrow.
Do we think that do you guys have exposure to China portfolio wise? Are you trading anything in China right now?
Zero.
Zero?
No, I don't really.
Is that by design or something you like? I've kept it pretty minimal. I had a good run. I know we talked about some of our bigger roundtables over the last year. But like September last year, when it was announced, like here's 5 trillion yuan to back up the stock market and property market. I mean, I had some good runs in Alibaba and Baidu, CQQQ, FXI, KWeb, JD.com. Like that, I had a little basket of China exposure, and it paid well. I've trimmed that since. I have FXI. I've got some exposure. That's large cap China. And then I have Alibaba, Baidu. That's it. I'm working down some costs. I've got a diagonal spread running on JD.com. I've got some shares and covered calls. But Baidu and Baba, I'm letting them run. I think that there's some good like long-term levels where they might be like surprisingly good tech stocks. I know that everyone hates China. I know that people don't believe the numbers. I think it's all funny money. Well, so is some of the crap that we've got spit out in the US.
Right.
You know, I mean,
agreed.
I just think that if look, it's a value opportunity for a tech play. I don't think that this whole priority for us to go all in on AI is like, well, we're just going to surpass the whole world. It's like China's got some AI potential too. What do you think DeepSeek was? What do you think? What do you think? Nana banana or whatever the heck that is. That's like a Google threat.
Yeah.
Well, stuff like that.
The only thing that I had a problem with and why I've stayed away from it is that, I mean, with Trump coming out doing all this tariff stuff and everything like that.
Oh yeah,
it's my luck that I'd buy something like Baba or whatever it is, and he comes out and goes, "Well, we're slapping no tariffs on this also," and then I'd come in the next morning and I'm getting slammed.
yeah,
and I don't want that exposure, so that's
Agree.
why I've stayed away from it over the past 6-8 months, just because to me there's too much risk in it.
Yeah. I stay away from China stocks a lot because of this. I don't know what this chart is. I mean, look at all these gaps, man. It's just crazy. This is why I'm always hesitant to trade Chinese stocks.
Oh, is that JD.com?
JD, yeah.
Yep.
Like that's
I've
just
got.
like it's not.
Let me check
it's
here.
not-
I think
it's
I've
not
got some
like
covered calls in there.
smooth movement at all.
No, but
Bob
look
is
at
huge.
look at Bob and Baidu, because that's what I've been getting paid on is rips like that. Like those are huge jumps.
I mean,
Those are
yeah,
huge jumps.
these are massive, but look at these gaps. It's just like no consistency. It's like, oh, okay, well, we're just gonna go up,
Yeah, it doesn't make any sense. But
Yeah.
zoom out and just look at a weekly chart, zoom out, and it's like I just think you can see like some pretty good technical patterns, and it's like if they come to fruition, it's technical trade. So I mean, we had a multi-year base that is now starting to show like higher highs and higher lows. It can channel or it can just rip, but it's like from all-time high to low, it's like a Fibonacci that pulls back 38% or 50%. I think those would be amazing profit targets. I'm not trying to hold this thing to all-time highs. I'm just saying, yeah, I think we can go to 180, 190. 50%. Let's see if we get back to equilibrium.
Yeah.
Boom. Take some profit. And I've been holding this thing since the lows at, whatever that is, $85. Oh yeah, that's Baba's. That's like $60. Yeah. So like $70 cost raise is $70. Run it up to 180, 190. I'm a happy clam.
Yeah, that'd be nice.
But it's taken 2 years to do it. I mean, it's not like this has been this easy journey on holding. It's like, and I'm not saying I'm smart by having the courage to sit through crap for 2 years either. But it is nice to see there's a little bit of a pop to it.
Yes.
And my opinion on like US and China is like, we're frenemies. We need each other more than the optics will ever let us believe. We need them to buy our stuff, or we need them to make our stuff, and they need us to buy our stuff. And this whole idea of BRICS, and they're going to, look, I don't think the world is going to align themselves with China. I think they're going to do trade deals with China out of necessity because they have commodities, they've got rare minerals, blah, blah, blah. But nobody wants to just like back China exclusively. So I think it is constantly a tug of war between people. I think countries want to just align themselves with, look, we want to do business with both. Why can't we do business with the US and with China? That's called globalization, and not be told to choose. Like, why would countries be given an ultimatum like, you got to do deals with the West or you got to do deals with the East? And if you don't, sanctions and repercussions and tariffs. It's like, I think we need each other more than we ever will really admit. So I just say, I forever have thought this, like, we're frenemies, and we'll continue to have to do business by necessity. I wish that we could say it would be a mutually beneficial agreement with, like, I think you're right, Alex, that Trump probably wants to have less noise in China and less tariff stuff and more trade deals and less, or more trade deals and more negotiations. But I also think China is constantly playing the long game.
Yeah, well,
they don't care that Trump's going to be, either midterm risk in 2026 or he's done as president 2028, and everything he just did could be completely like turned down. It could, like, pendulum shifts the other way politically. We have no more longevity than 2 to 4 years.
Right.
Yeah.
And China's like, absolute power. How you like them apples?
Yeah.
You know?
Yeah, I mean, that's so one, that is the hard part about democratic systems, is China and Russia as well can plan 10 years, 15 years in advance. We can plan until the next election.
Exactly.
It puts us at a disadvantage. I'm also not saying that, I'm not just like coming up with the thing that I live around DC. I have friends who are like, who, work for different agencies and whatnot. And it is coming down from what I've heard. And this is nothing like secret, but the administration wants the focus to be on this hemisphere, on Latin America. And
Okay.
they want to use like the Monroe Doctrine to sort of power project across Latin America and the Caribbean. And China is not really, we're not trying to go to war with China.
Right.
So take that for what it's worth. But that's
the
bullish.
Taiwan risk. You think that's subsided? Invading Taiwan?
I just never really thought China would invade Taiwan.
Yeah.
I don't know. I've never really been worried about China invading Taiwan, because I just, I'm not a China expert, but it just doesn't seem like they don't have the vibe that they would do that. So maybe they will, maybe I'm wrong, but
yeah. I think if it was the US was ever at like its weakest point, then maybe it would happen. But I think the US at least has shown a lot of resiliency from 2025. And yeah, man, it's the art of the deal at its finest with whatever you call 2025. I'm still just wondering what happens this week. It's like, honestly, we could talk all this stuff bigger picture, but I'm just curious if we get a pullback on the daily 50 moving average on the SPX. Like, that's all. I'm like, we're 93 bars, man. 93 bars from April and May, 93 bars from the 50-day moving average, 250 to 270 plus points. We've been playing this game of ups and downs and ups and downs and ups and downs, melting up higher. I don't know if the Fed is going to be like the little like blast off top, and then we start to fade over the next maybe 30 to 45 days. Or maybe the Fed, I don't know. It's just, obviously it's price action based, where how does price react on the Fed? I don't see Powell necessarily being like really political and having like a hawkish cut, because right now the probabilities are pretty high that the Fed's just going to cut 6 times through 2026. I don't think he's going to change that. I think if anything, his legacy is, hey, look, Jackson Hole announcement was kind of acknowledging that the 2% inflation target was a little bit too low, and there's room for improvement. We've had a restricted monetary policy rate for a while. So at 4.5%, we can cut to 4.25% and still have room to cut more. Inflation is probably not going to go down. I just think that they're allowing the inflation levels to run a little bit hotter, a little bit higher, to encourage growth, enable growth. And then we'll see. We're going to kind of grow at all costs until we have to print at all costs. And then there's really the problem. I just don't know when that is.
Yeah, no, I agree with you. I mean, well, if we do 6 rate cuts, that'll put us down to what, like 3%?
It's like 3%, I think. Yeah, if we go 150 basis points, yeah, it'd be like 3%.
That's wild.
Yeah.
That's crazy.
I mean, I wish I had a crystal ball to look out when the Fed rate is at 3%. What's the 10-year yield at?
Yeah.
Because I don't think it's going to be 3.5 or 4. I think it's going to be, I just don't know, man. I feel like the yields, I mean, I just took a screenshot over the weekend. Global yields are up. It's like you look at UK, Europe, Euro bonds yields, Japanese yen yields, like all those are going up and global PMIs are going up. And I just can't see fundamentally how yields are going to go dramatically lower. I'd love them to. I just don't think it's going to happen. So we'll see, man. I don't think the market's going to fall apart. I think that this is an all-in, this is an all-in scenario. I think the global economy is best when the U.S. is healthy. I think this is like that decision of, actually, I had this conversation this morning. I'm curious your thoughts on this, guys. There's a lot of portfolio managers out there that are underweight equities. Institutional wise, there's a lot of people that are underweight equities. So you kind of have two choices, right? You can double down in this recession narrative. You can double down in this market's topping out. There's an AI bubble. Valuations are too high, blah, blah, blah. You can double down on that. And you can be a perma bear. You can hope that something, happens that's negative. Or you can probably do what most portfolio managers are going to be forced to do, which is add some exposure. And this is also another reason I think that going to the end of the year, I think the market's still tick higher. There might be some volatility along the way, but I still think they find a way to go higher. I think that there's underweight exposure. And I mean, look, portfolio managers aren't stupid. They should be selling puts. They should be adding positions at discounts. They should be, looking for some add-on dollar cost averaging trades to leg back in. And if the market does dip and pull back, then they can add that exposure at a better price. But I also think that by force, they're going to have to be participating at these highs. Like some of them, I mean, if you're a mutual fund, you're mandated to be at like 95% invested,
Right. I was going to say, but you're saying most of them are in cash, or they're in bonds, or they're in what?
I don't know, because I think if they're in bonds, that's a train wreck waiting to happen. I feel like if they're underweight equities in general, they're just not allocated. They're in cash. Because I mean, if you're in cash, if you're in something like, BIL or Gov, like you're getting a 3 to 3.5% mix on unallocated cash. Like that's enough. I mean, I listen to enough podcasts with our, investment advisors and portfolio managers that, I mean, these guys are like, yeah, we kind of track the benchmark. We have, we're like 80, if we can get, 80% upside and only risk about 20% downside. It's the very traditional, like 60-40 active portfolio management type stuff. And, they're probably 30 to 50% allocated. One of the podcasts I listen to, the guys, Adam Taggart, it's Thoughtful Money, and he brings on a couple of advisors like every week, and their firms are like 30% equities. That's it. Wow. And a firm like that is like getting its ass kicked with performance, it's like they're up like 5% for the year. Instead of, I mean, and look, the benchmark's up 10. A fund that's like, during Liberation Day, they're like bragging that, we were only down about 4% during Liberation Day. Well, that's cool, but you're only up 4 to 5% and the market's up 10. So you're reducing risk on the downside, but you've been just way underweight and way underperformance on this melt up. So I just think funds like that at some point, whether you're adding allocation, and obviously you don't have to add to Mag 7, you don't have to add and chase to, chase AVGO or chase, NVIDIA. It's like you can add into where value is sitting. I mean, I think energy is going to be an interesting trade here the next 12 to 24 months. Sure. Like it or hate it, I think that Bitcoin's an interesting play. I think that Tesla's an interesting trade. I think there are opportunities, but like I said, I don't really know what individual stocks to own outside of where I can get high premiums and high workability. If I'm trading options, I want to make sure that I can get good premiums to work my cost basis down and have income if I need it. I mean, we could have this conversation on like in the money covered calls that you just collect the premium, you roll it for a loss, but you're getting the roll every like month, every 30 to 60 days. You can increase your cost or lower your cost basis by a couple of bucks. I do it on the SPY, the Qs. I do it on all the shares that I have that have been like Tesla. I own shares of Tesla like 250. And my covered call is sitting at like 320 right now. So I'm underwater from the stock price being at $400. But every month that I roll that thing, I'm getting anywhere between like $2 to $4 a credit. So I'm just going to keep rolling it, and then I'll add more exposure. I'll add more puts. I don't know. I just think it's interesting to have the argument where good, like billions of dollars under management are underweight equities. And to your point, Jeff, like I don't think they're in bonds. I think that everyone that's trying to be short bonds, long yields, I think that could be like a backwards trade. I think obviously what happened this last couple of weeks with bonds ripping like almost 8 or 9%. I think that's a preview of maybe some higher bond volatility in the near future. But I literally dumped all my positions in TLT. I was long TLT with diagonal spreads. I dumped I got about 85% of my max profit out of that, and I don't want TLT. I'd rather put it in gold and silver. I think to me that's a better trade until my levels are hit. So I
Yeah.
think there's also less volatility on gold and silver than there would be on bonds for,
But
I mean,
another
whether you
question,
believe it or not.
You were talking about, the home builders and stuff like that earlier.
Mhm.
What about REITs? I mean, what about like
It-
Simon Property and
Yeah.
what is it, Equinix and all those guys?
Yeah. I I mean, they have yield, right? It's like we're talking about a 5% yield. They've been
Right.
going up since COVID. I think there's the time and a place for those, but I think the biggest concern is what is their portfolio? What's their like broader refinance rate? I mean, I don't think they're all out. I mean, if this is commercial real estate we're talking about, I would think that most permanent financing is like 8 to 10% on the corporate side. I think if you're a home builder, I mean, I know that a lot of home builders like Pulte and Lennar and Toll, they're building at like cost plus, and they're trying to get like a 20% markup. In some markets, they allow to build them at market plus, which is an insane rate.
Yeah.
But SPG, I'm looking at SPG right now. I mean, it's not too far away from all-time highs. It's expensive where I wouldn't necessarily like want to throw a trade on it, but we're only 24% from all-time highs. Let me just take a look fundamentally. I'll take a look. So SPG, I'll see. I'm sure it's healthy on paper. Let's see here. A lot of debt. So my risk in a trade like that, Jeff, would be that if we see Fed rates come down, but global yields do not, I don't think that the debt restructuring or the debt refinancing is going to be a big benefit. I think they're going to find themselves in, a lot of companies that have been holding out for this, rate cut cycle of, promise rate cuts, and now it's 2 years into it. And if they don't improve that much, I feel like all this like bubbling debt is going to be your forced refinance. I mean, if you can imagine taking a COVID loan in 2020, 2021 at like sub 2% or 1%, something ridiculously low, or obviously in the housing market at like sub 3%. And now you're going to refi at 6,
Yeah.
7,
Yeah, I know.
8. And it's like, I just don't think there's a way to escape that stuff with higher debt burden companies. So
Right.
that's my
Right.
risk on something like SPG.
Okay.
Yeah.
Well, I mean, I've always watched the home builders and stuff like that, but I've gotten to thinking, the REITs have a tendency to perform pretty well also, but I have never dabbled in all of them, all that much. Once in a while I'll do PLD or something like that, but
Yeah.
it's not very often that something comes up on a scan that I have and I go, hey, that looks pretty good. Take that.
Yeah. I mean, the chart on SPG looks like a buy the dip. It's
Yeah.
just I don't want to buy now. It's like if we dip back to like 145, 150, then there's a good play there for higher lows and higher highs until we hit the highs at 228, 230.
Right. Yeah.
But yeah, I mean structurally, technically, it looks good. I just think that I don't know what this like real estate situation looks like if yields don't go down.
Right.
That's
Yeah,
my biggest concern in the real estate market is, and think about this way too, home prices. Look, everyone wants lower rates. Nobody wants lower prices, right? Like
right.
new home buyers want lower prices, but they're not going to get it. Unfortunately, they're probably not going to get lower home prices. What they will get is bigger supplies and maybe more availability.
Yes.
That might drive new home prices down a little bit, but existing homes, nobody wants to see an existing home price get a major discount, So I don't think that, I mean, if somebody is going to have to take a 20 to 30% haircut on what they think their home is worth, they're not going to be happy about that. If somebody's going to take same thing we talked about before, if you mess with people's home equity or you mess with people's portfolios, they're going to be unhappy consumers.
Mm-hmm.
So I think that if you're lucky as a new home buyer, you're hoping that rates go down. If rates don't go down, I think everything gets a little bit stickier out there. That could be pretty messy in the next 12 months.
Right.
Because it just stretches the consumer out further.
Yeah, and I agree with you. I think, they might be able to get a cheaper rate over the next, probably 6, 8 months as far as interest rate on buying a new home.
Yep.
But they're not going to get a cheaper house by any means, not with the price of everything up at where it is.
Agree.
I don't think that's, I mean, people have, if it's, because these interest rates can cause a $2,000 swing in your monthly payment, a $1,500 swing.
Oh, yeah.
Yes, they can.
But they don't need to go down. And because like, as long as you're just not paying $4,000 a month for a mortgage, I think that's going to open up a lot of housing, even if the prices don't drop, It's just people are gonna. That's a lot easier for people to stomach than.
Yeah, but I'll to argue about like the cost of a home. It's like it's not just the cost of a house that goes down, but it's like think about what labor is to fix a house. Think about what property taxes are. Think about home ownership. Think about like monthly costs that have gone up in grocery stores and at the pumps. Like life of owning a home is more expensive. The average salary is like 6x salary just to own a home, own like the average home price now.
Yeah.
You know, like that's where like the consumer has been stretched, and that's what made this the most like unaffordable housing market. Is it's not just, you know, I have a mortgage now, it's in my budget. Well, right, but you still go to the grocery store, you still got kids, you got daycare, you got school, you got life expenses. That as a overall budget is now more expensive. And I mean, it's great if home prices are better. It's great if rates come down a little bit. But I just don't think a, you know, $500,000 house at 6-7% is really affordable for a lot of people. Like honestly, man, like I rack my brain with like friends we have out here and friends I have in different states and all over the country. It's like, how are they getting by right now? Like if it's a one income household, is like, how are they surviving right now? It's like I just don't get it. I don't get it how some people are like hanging in there. And I hope they can. It's just it's got to be freaking hard, man.
Yeah, you look at, I mean, just basic maintenance. I mean, some of you guys might not have air conditioners because you don't live in that part of the country. But I mean, you go get I got 2 air conditioner filters in my house. And I don't get anything extravagant, but when you got to pay $19 a filter and you got to replace it every 3 months, I
Mhm.
mean, that adds up over a year. That's just putting in an air filter.
Yeah.
I mean, you're putting $40 every 3 months and just to air filters. I'm just like, that's just absurd. I mean, but anything like that. I do a lot of the maintenance around my house all by myself and everything like that. I don't hire anybody, but I mean, there's going to come a point that, you're going to have to hire somebody to do something. And with labor rates at, $60, $70 an hour, I mean, your bill's going to be pretty high.
I'd say that's on the super low end there, Jeff. Like,
Oh,
I mean, somebody just typed in, $3,000 to fix an air conditioner. I mean, getting a quote to put on like a backsplash, like I just was, quoting out a couple things. It's like, and I say this because I've done these home projects in the past,
yeah.
and materials are fine. Like, like $1,000 of material. Project was, I think I paid this handyman. It was like $2,100 to do like a kitchen backsplash.
Okay.
Right now that same quote's like $4,000. Material prices haven't gone up that much, and so I was also, this is back in home in Michigan. If I wanted to put in like one of those big Generac backup
Yep.
converters, right? The generators, right?
Right.
I think I could have done an all in, like they built the pad with like the pebbles and the P rocks or whatever they were, and it was like the unit was like $4,500. The labor was like another $2,000. So it'd be like $6,000 to $7,000 for the full thing. Backup generator. You can really back up everything in your home. Now that's like $11,000 or $12,000. Like, and I know those are big expenses, but I'm like, it's stuff like that you can now take into like every labor contract, every DIY. It's like you hire a handyman. I just think that sometimes they're like, well, let's see how many people I can bid, and I'll just throw this, $200 an hour labor. Somebody comes in and fixes your floor. I mean, again, this is just a story, but it's a friend of mine that wanted to do his floor in his kitchen, and he's in California, so I'm already a little skeptical. But he got quoted for like new floor and new shelving, like new pantry, new shelving, and new floor in his kitchen. And we're talking like life-proof flooring. It's not like crazy, hardwood expensive stuff. It's like life-proof flooring that's like maybe $1 to $2 a square foot.
Right.
$65K was the quote.
Man.
And he did it because he's like, well, I did 3 quotes and 65 was the cheapest. And I'm like,
Wow.
what?
So
yeah. So it's like, I mean, the cost of home ownership, it's, and I'm not saying I'm very much against and opposed to, well, I'll just rent because at least there's a budget. Rent prices are going to keep going up too.
But the question is out in California, can he get the 65 back if he sells it? That's the question.
Not exactly, because he's already sitting at like the higher end of like what he thinks his home is worth. And also in his area, like all the comps and stuff, they've been steadily going lower, lower, lower on sell prices. So he's kind of like, if we do this, we don't know if we're going to, but there's enough home equity that's in it. Like, I think they bought their home for like maybe 4 in Sacramento. And I think their comps are like in the 600s. So in a
Yeah.
way, yes, they can probably get that back, but it's like, as far as what they're seeing, comp wise, it's like the actual like sales are going lower and lower and lower, because if people are trying to move them, they're motivated to move them. They have to decrease the prices.
But I go buy another pickup as opposed to fix my kitchen if I couldn't get my money back, because I'm going to lose it in the pickup anyway.
Yeah, that's true. I know. Yeah, I mean, the two, I think there's two mainstays in DIY or home improvement is if you upgrade kitchens, bathroom, basements. Those are kind of the three areas you might be able to recoup that equity.
Right.
Yeah.
Right.
Yep.
Well, you got a new handyman shouting out to you. He can do it for you for a lot cheaper.
There you go. DAP. All right, man. We might need you. We got a nice little island that
Jeremy, Jeremy, are you in Orange County, man? I kind of want to move to Orange County. I gotta be honest. I went to California a couple weeks ago and I loved it. And yeah,
$5 gas and epic waves. I think the last part's the most important thing. Epic
yeah,
waves.
that's what I'm saying.
Yeah.
Yeah, you pay $5 in gas, but you get like you're living in perfect weather. It's amazing. I don't know. Maybe it's worth it. Maybe not. I did like it while I was there.
Yeah, I couldn't see myself living there, man. I love the weather, but I can't see myself living in California. Yep.
Yeah. I'm from the beach, so I'm like,
At least as a business owner. I don't know how it's favorable
that's-
business
that's-
ownership, and I think you get nickel and dimed and paper cuts to death if you're a business owner in California.
if I was a what is it, W-2? If I was a W-2,
Yeah.
your pay scales with the where you live, so
Sure.
you get more. But yeah, you're gonna get eaten alive. That's probably why I'll never do it.
Yep.
Oh well, I can visit. I have a friend in Irvine.
There you go.
Yeah. Yeah, I mean, so I was like looking at there was some flows coming in on silver, but it's pretty far, 41.50 by October 17th. But that's only one, and I don't know. I mean,
I just sold puts today. I think let me look at I just did some new trades today on SLV. Let me call them out here. So SLV new trades. I did a SLV. Oh, these are filled. Okay. So so my margin accounts, I did a 35, 34, 33, 32 naked put. So if I own the shares, I'd be willing to own up to 400 shares. So it's a little pricey, but 35, 34, 33, 32 divided by 4, 33.50. But then I subtract the $5 credit. So that's 4.95 divided by 4 minus the 33.50. If I was assigned on all those levels, fellas, I'd be break even on SLV at 32.26, which is a pretty good discount. That should be below the 200 moving average or close to it, I'm pretty sure.
Mm-hmm.
The moving average is 31.69. So if I took that ownership, we'd have to have a huge drop and not see support at the 100 or 144 or 200 moving average. So I don't see that really being the case, especially when we are in open space to the upside, breaking above that 42 spot price, all-time highs at 49 to $50. That puts silver SLV around a 44.06. So that's kind of my target is if I get SLV trading into $43.50, $44, I'm probably taking some profit, protecting some profit.
Yeah, I'm not. Yeah, I mean, it is interesting because like I can show you here, like you can see this 40 on October 17th. You see the 41.50. You see how there's like a huge surge in volume over open interest.
Yeah.
Now normally when we trade these, for anybody who does follow the unusual options flows, if I see this is cool. But you normally look and see on the other side. If we're trading puts, I'll look at the calls. If we're trading calls, so this is a call. I look at the puts, and you can see that there's also significant volume over open interest on the put side too, which leads me to think that this is not actually. It's maybe a
selling calls,
a straddle or something. It's not. They're trying to play both sides. It's not very directional. So. I wouldn't enter that.
You're saying you would enter it like directionally to go long, like long calls?
If there wasn't all this put volume too.
Right.
There's just this leads me to think, and they're kind of at the same width of strikes. It seems like it's kind of looking like maybe a condor or something.
Condor or strangle. I mean, if you're selling, if you're
Yeah.
selling that call, selling that put, that's strangle.
Yeah. So I'm not really, so yeah, anyways, just a little insight into maybe if you're once we launch this thing, if you're using it, check that out. Jeremy, thank you. I will definitely take you up on that, man. We can go serve. I want to visit Huntington Beach anyways. I've heard it's a pretty cool place. In the OC. Very cool. So yeah, folks. One of the thing I want to talk about is we did have this turnover but I guess it's recovered now. Sorry, I know everything's on the screen. We had this turnover in like some of the market leaders. Palantir, Hood turned over. Now they're recovering. Last week we did get a nice little winner on Palantir. I don't know if anybody was here. I forget if we streamed it here or streamed it on another one. But so Palantir is recovering, and if you see, I'm pretty basic with the way I trade. I really only use two things. One is that flow scanner. So if you want to get in on that, I post the trades free every day. We just got a 20% winner on Iron this morning. It's a Bitcoin mining company. We traded that a few times. It's really good stock. It's free, 20% winner. I give those all out for free. So get in on the Telegram if you're not already. And but also in addition to that, I use these little lines here, which I don't know. Does anybody know what those lines are called? Moving averages, right? So I'm pretty basic with the way I trade. That's basically all I do. And I actually made a tool because Telegram link, Janelle, Blake will drop that in for you. So I made a tool. I like moving averages, and I think that the more you get an insight into moving averages to me, they create these things called momentum maps. They're basically to me one of the only tools you need to trade. They create support and resistance lines. If you see here, basically this moving average, it can be a stand-in for support and resistance. We can look at even something with a stronger trend. Let's look at AVGO. I mean, you go back to AVGO, right? This is the 9 moving average. It never dipped below, and if it did, it didn't dip below the 50 for a huge number of days. I forget how many. Basically, from April to August, mid-August, it just dipped below the 50. So when you're using RSI, MACD, whatever, right? You can. I want to challenge you just to do something like simplify your charts. Try, and if you're doing a lot of success with those different indicators, sure, go ahead and keep using them. But if you're not, I do challenge you. Simplify your charts down to these moving averages, the 9 and the 20. They're going to help you. They create the support and the resistance lines. They create price consolidation patterns. You can basically see everything I think you need to see on a chart just by moving averages. And sometimes volume, which is the little right bars on the side there. Now, what's better than 2 moving averages, right? Well, if you start really combining different moving averages, like I mentioned and alluded to, you get these things called momentum maps. And if moving averages are great, if 1 moving average is good, if 2 moving averages is good, well, even more moving averages are better. So I created this tool, this indicator that you can just plug into TradingView or Thinkorswim with literally a couple clicks, and you can start using it. We used this tool last week. We got a 30% on Palantir. Let's see. Let me show you what it looks like right here. We got in here on the call 2 days later. We had gotten 31% winner as, again, the momentum map told us it was going higher and it followed through with us. So I want to tell you how it works. If anybody's interested, I want to show you how it works. Show you how we got a good winner last week. We got a good winner before that too.